Hi there, folks. Welcome to Stinchfield, the podcast. So great to be along with you this morning. All eyes around the financial markets. We know the economy is going to be okay in the United States, but boy, oh boy, what are they doing over there? These Iranians with the drones and the swarms and hitting the oil tankers. And then we got the terrorist attack, what looks like a possible terrorist attack in Detroit, Michigan. And everybody's just uneasy about everything. I wish everyone would just take a breath and realize where we are with the Trump economic miracle, literally in the process of taking off until we hit this hiccup. And then you got the media on top of all of that, literally trying to put every seed of doubt into the American people that, quite frankly, it's getting annoying. We're going to talk about all that today. You know, on Fridays, I like to talk finances and specifically the markets, which is a great reminder for all of you to go to VRAinsider.com. That's VRAinsider.com. This is a daily financial newsletter, but it's really more than that. It is a portfolio, 10 to 15 positions spelled out directly to you, what you should be in, when you should buy, when you should sell. And get this, 35% on average returns. Amazing. I love these guys. We're going to talk to the son of the founder of Vertical Research Advisory here in just a moment. But again, they're offering up a free 2-week trial of their newsletter. You get access to everything. VRAinsider.com. VRAinsider.com. Check them out. All right, with that, folks, let's get the show started.
Uncensored and unapologetic. This is Stinchfield. Here's your host, Grant Stinchfield.
All right, welcome, everybody. My guest today is Tyler Herridge. He is one of the sons of the founder, Kip Herridge, who you know from this program with Vertical Research Advisories. The website is VRAinsider.com. Tyler, it's great to have you on the program. Welcome.
Hi, Grant. Great to be here with you today, especially with everything that's going on in the markets right now. It has been so eventful, so glad to be here with you.
Absolutely. Well, first time on this show. I'm sure it's going to be many times to come, and we're looking forward to talking with you about this. So I guess the first question, Tyler, is everybody's looking at their 401ks. If they've got a portfolio of stocks, you know, I was looking yesterday, Thursday, everything was red again. We had a lot going on in the world yesterday. Are you guys getting concerned yet, or where do you fall when you look at overall direction of this market?
That's a great question. And especially as we head into the weekend, I know a lot of people are going to be checking their portfolios over the weekend. And it never feels good to see red on the screen, especially not in your portfolio where you have your hard-earned money saved. That never feels good. But as we see it here, we remain in a long-term bull market. And this otherwise is a counter trend move driven by, some exogenous factors, right? Just a few weeks ago, it's funny to mention this now because so many people have forgotten about it. Just a few weeks ago, it was the AI trade. The AI bubble is going to pop. And then it was, actually AI is going to take all of our jobs. And then with the latest in Iran, that really went away pretty quickly out of investors' minds. So outside of the fundamental factors for this market, it really has been a headline-driven moves over the last few weeks here. And today I'm looking forward to getting into a few stats on where we're at in the markets right now as a whole and why we remain so bullish from here and look at this as an opportunity to buy the dip. Because the fundamental story has remained unchanged. Earnings, we just got a fantastic Q4 earnings report. There remains a ton of liquidity in the system. And there's so many reasons that, as we'll get into today, the Trump economic miracle, the innovation revolution, that are under the surface and really haven't been making headlines that people are quick to forget about when you see red on the screen.
All right. So we'll talk about the headlines first. I believe your father had called it a psyop of negativity. I've been using that term a lot, and I think it is a great term. I think it has to do with just about anything President Trump does. The media runs the psyop of negativity. That does have an effect on the markets, though, because I think when you start to infuse this negativity into everyone's minds, ultimately, it gets infused in the minds of traders and people that are trading oftentimes big positions. Your thoughts on the media's role here?
Yes, that is a primary theme of ours here is the psyop of negativity. But in reality, there's never been a better time to take control of your own financial future. There's never been better tools at the disposal of individual investors, mom and pop, retail investors. And that's who we look here to serve here every day with what we do at the VRA. But part of this psyop of negativity, one of the things that we do like about it on our end is we're contrarian investors here. So when everybody's getting scared, that's when we're adding to positions. So it has been a rough last few weeks, and especially with the headlines. There is so much negativity out there, but the market is still roughly 5, 7, 8% away at the worst for our major indexes from all-time highs. So it's good to put it in perspective from time to time. And at the same time, we're seeing extreme fear out there in the market. We've got a few different sentiment indicators that we look at the VRA, part of the VRA investing system. And right now, we're seeing extreme fear across the board. Just today, we got back what's called the AAII Individual Investors Survey, a huge upswing in bulls. This report comes out once a week. We saw a 10% increase in bears week over week. So sentiment is certainly leaning bearish, despite the fact, again, we're not that far from all-time highs. And when you look back at market history, it really is pretty run-of-the-mill. We get on average, a 10% correction in the market every 13 to 14 months. We're coming right up on that now from April's tariff mania last year. So we think this is an outstanding opportunity to go the other way, take a contrarian approach.
Explain to me. So if you see this sentiment growing of bearish, of bears out there, up 10%, wouldn't that tell you the market's going down? Explain to me why this works into your philosophy that the opposite will happen.
That's a great question there. I'm so glad that you asked that because you're right. You would think maybe that's an early warning sign of the way that investors are looking. But so often, it's tough because we want to tell the market what to do. But at the end of the day, you really can't do that. We've got to listen and respond accordingly to the market. So when you're seeing big increases in bearishness like this, the market likes to fool as many people as possible, likes to get as many people as possible on the wrong side of the market for newer entrants into the market. They see the red on the screen.
Is that then the big investment banks and the big powerful traders that are just screwing the retail investors?
Oftentimes, yes, and especially in the headlines, because you have retail investors tuning in to CNBC or Bloomberg, and they're talking about fear, and really they're buyers in the background there. You see it so often. Now, the inverse will come true one day, where we have a market pullback like this, and you're seeing 5, 7, 8% from all-time highs, but our sentiment indicators remain very greedy. Everybody out there is saying buy the dip, right? Everybody and their mom is trying to buy the latest stocks, the latest high flyers. That's the sign that you want to start taking more caution in the market. So that day will come. We think that we're likely years away from it at this point. And it's tough to say on a red day and on a red week like this, that it's time to start getting into positions, but oftentimes that's the best scenario to do it in.
All right, buying the dips is certainly a great way to go, and you guys spell it out. I mean, VRAinsider.com. You sign up for this email every morning. Gets delivered straight to your inbox, and it's all spelled out. Literally a child could do this. And when I say a child, I mean a teenager could literally follow the VRA Insider system. It's not difficult.
Exactly. And we're not day traders either. For anybody who doesn't want to be plugged into the markets every single day, I totally understand that. We all have lives to live at the end of the day. You're working a job. You want somebody who you can trust in this space. And that's what we're here for. That's why my dad, Kip, founded the VRA in 2003 with the goal of helping individual investors. That's what we've done since he founded it in 2003. I joined him 10 years ago now. We've beaten the markets 19 out of 22 years. We wake up every day excited to do exactly that, to bring it to a retail audience in a way that is actionable, that you can apply to your portfolio and truly, again, take control of your own financial future.
One of the things that I love about VRA Insider is that you're not just a stock picker. I mean, you're saying invest in Bitcoin right now. You guys are saying invest in gold. Gold has been a huge part of the portfolio, and sure enough, during all of this chaos, gold still is now back making new highs every day again.
Mm-hmm. Yes, back above $5,000 an ounce. Even though it has pulled back from the all-time highs, we're still up 19 to 20% on the year. It's only the beginning of March here for gold. That's an incredible run. And we've been long-term bullish on gold. Kip first recommended it in 2003 at $350 an ounce, which you compare those returns to a money market account or even the S&P 500, and you're doing far better saving in gold over time. So that's been a big theme of ours here. As we continue to see the money printers on, it's a time where we must own inflationary assets. We don't see inflation as going to be another problem like we saw in 2022, but you still want to own assets in this environment. And there really is no better than gold. So, my dad's a gold bug. His dad was a gold bug. I'm a gold bug. My younger brother just joined the team. He is as well. I don't know if you could find anybody out there who is much more bullish on gold than we were even a few years ago before this move started. So we've been loving seeing where it's headed. We still think it's early innings here. Gold still has a long way to go.
What do you think? I've said, I mean, look, I'm not as good as you guys at predicting things, but I said $10,000 not out of the question. And even in the near future, I say a year, 2 years, $10,000 not out of the realm of possibility. Where do you guys think gold could go to?
Yes. Well, first of all, I think you have fantastic instincts. So definitely, you could absolutely do this if you wanted to put your mind to it as well. But we're on the same page there. We think we're in a period here for gold where we're getting true price discovery. For years, it was manipulated by the big banks lower during that time. We think we're finally in a period where gold, again, true price discovery here for this group. So our longer term price target is right there with you, 10,000 and beyond. Really, our price target by 2032 is $15,000 an ounce.
Wow, it's unbelievable. Does silver fall into the same category? I mean, I know silver isn't as expensive as gold, but does it fall in the same category as the rate of the rise that you're expecting?
Yes, and silver had some catch up to play. If you look back on the historical ratios of silver to gold, silver really had a long way to catch up. That explains some of the recent huge move that it's had, and we do expect that to continue for silver. Maybe not quite at the pace of gold over time, but as far as valuations go, silver absolutely still has a lot of room higher. You don't want it to go too high because it is in so many industrial products as well. But yes, we do like silver. It's in the VRA portfolio too.
All right. One of the things, I'm a big believer in physical gold. So I actually like to own physical gold, but I understand not everybody can do that. And it takes there's some logistics to owning physical gold. I do think it's the safest way to own gold, but there are some funds out there. What are your recommendation when it comes to funds if you were to use the fund as an investment vehicle tied to gold?
That is a great question because, like you said, it is whether it is the storage of it or where you're buying it from and finding somebody that you really trust. Those things can be difficult if you're just getting started with gold. I'm on the same page as you. We recommend physical first and foremost, but there are some phenomenal products out there now. The main one that everybody looks at is GLD. You don't really want to own that. It's a paper trading version really. But there's some other great ETF products. PHYS is a Sprott product where they actually do have physical backing of it. So do your research there. There's some other great products too. We do like physical gold first and foremost, but also, if you're really looking for the leverage in this group, it's the gold miners. That's where we do a lot of research as well. If you're looking, again, for the leverage to the upside, gold miners typically outperform the commodity by about 3-1 in big moves higher. So you really want to own the gold miners. We think there's a place for that in everyone's portfolio. We've got two of them here at the VRA that were up, combined over 1,000% in the last few years for those. So it's been an incredible run, but again, it's not too late. Definitely not too late in this bull market, a generational bull market.
I'll use that as a tease, right? So you're giving away 2 free weeks of the VRA Insider. You get access to everything, the back end, the daily emails. Those are given away. Those miners you're talking about, they're in the portfolio right now. I own some of them as well. I've been following the VRA program now for about a month. I put I would say a sizable portion of my portfolio aside. I just opened up a second account at my Schwab account and put that directly to what you guys are doing, and I couldn't be happier. But I'm invested in those miners. If you sign up for this free 2 weeks, you're gonna get that right to your email box. You're gonna know exactly what Tyler's talking about. Tyler, your father was talking last week about the Fed. Normally, when we go to war, we'll come in and buy up debt. We'll infuse the banks with cash, and they didn't do this. And ultimately, that lowers interest rates. They didn't do that this time around. The Fed is set to meet. When do they meet? Are they meeting next week? Is that right?
Yes, that's correct. They'll start on Tuesday, and then they'll have the press conference on Wednesday.
All right. What are you expecting out of them? I mean, I think this is literally a sabotage of President Trump. Jerome Powell's such a disgrace. We can't wait till the next Fed chairman gets in there, which is only a few months away now. But what do you expect out of next week?
Well, as you mentioned, I wish we could expect some more. Typically, when we're headed into a situation like this, where you see the fears, maybe even more so than the data, but the fear of economic instability, fear of war, this is when the Fed does step in and cut rates and eases the market's fear, gives some easy money policies out there, because people naturally are going to start protecting things. They hold it a little bit closer to the chest in times like this. And that's when you want the Federal Reserve to step in. But as you said, we've seen it time and time again now from Jerome Powell for all of the grandstanding of not being a political institution. I mean, they're an incredibly political institution. It's like 90% lean dim along the way. We know from a few leaked videos that Jay Powell is not a fan of President Trump in any way, shape, or form. So we don't say it lightly when we say that it does seem like a get Trump approach here, because it's not what the Fed would usually be doing. And that's not just me saying that either. Jay Powell has been incredibly unpopular for the market. When he gets in front of a microphone, he has the worst track record of any modern Federal Reserve chairman of sending the market lower. There isn't a close second, really. So again, it's not just me saying it. That's the market saying they really don't like him in front of a microphone. So they should absolutely be cutting rates. They should have in the last meeting as well. We're very much on the same page as the Trump administration here.
I
for
guess
lower rates going forward.
This actually points to the reason why we're just getting started in this bull market. The Trump economic miracle. You got the big, beautiful bill that we're just now starting to see effects from. People are getting bigger refunds than they've ever gotten before. And let's face it, we can look forward to Jerome Powell being out in just a couple months. So all of those things are going to add up and make a huge difference. Along the way, VRAinsider.com is right there with you. Vertical Research Advisors, Tyler Herridge, you're great. Your dad's great. Your brother's great. I love my involvement with your company, and I certainly love the newsletter. It's really been helping me a lot, and it can help all of you out there as well. Tyler, thank you for coming on today.
Yes, thank you, Grant. It's great talking with you as well. And like you said, everybody can come and join absolutely risk free at VRAinsider.com. Completely free access to everything that we have to offer there. We love helping people. At the end of the day, we're here to serve all of our clients, listeners, subscribers. We truly do we truly do love what we do and very grateful for the opportunity. So thank you for having me on today and looking forward to doing it again soon.
Well, I appreciate you coming on and thank you as well. All right, folks, let me give you the address as well. And I can tell you, they are good people. It's interesting to me how in life, what I've noticed are people flock to each other. Typically, I notice this really with conservatives. Conservatives will flock to other conservatives. So I'm at a dinner party. Next thing you know, I'm sat next to another conservative. I mean, I could be in a room full of liberals, but the one conservative there is sitting with me. Same thing goes for business with me. I don't know what it is, but people come to me. And that's the same way the Heritages have come into my life here is God works in very interesting ways when he puts people together. And I'm telling you, you will not go wrong with getting involved with this family and this company. And again, here's what you do. You try it out for 2 weeks and you'll see the system. VRAinsider.com. That's VRAinsider.com. Tell them I sent you and you're going to love it. All right. With that, folks, that's going to do it for us. Stinchfield 1776 on all the social media platforms. I will see you tonight on the Real America's Voice show, 7 p.m. Eastern time. Stinchfield's Army rolls because of all of you. We'll see you later.